Good afternoon, everyone. It's Dr. K here in London and Gil over in Playa del Rey, as
Where
usual.
it's morning.
Yeah, where it's afternoon, a nice rainy afternoon, but a warm afternoon because the temperature actually is going to kick up toward 70 degrees this weekend. So we're happy about that. Spring is definitely here. I wish you could say the same thing about the markets. The uptrend is intact in the major averages, but it's a very weak one, and leading stocks have been faltering around. We're also seeing precious metals get hit very hard today, and gold is actually the precious metal ETF GLD is dropping below the lows of its base. So this is the first time it's done that in 11 years. And then the question remains, why is it getting hammered so hard? I think it's conjecture at this point. It's possible that it's being manipulated. It has been manipulated before. That's the price of gold. It also could be presaging some sort of deflationary situations. The PPI this morning came in at minus 0.6%, and it is puzzling because all this money printing is going on in full measure around the world by all these central banks. So that should devalue currencies and prop hard assets, including and especially gold. So when you have a bifurcation like the one we're seeing, you have to step back and say, well, what do we know about what's going on and what don't we know? There's certainly a number of things that people don't know, including ourselves, about what's going on, but we are getting clues from the price volume action of the metals. So there's going to be, of course, a lot of theories put forth as to what's going on with gold. And again, price volume rules all. So if you were sitting in a position in gold and now it's broken the lows at the base, we hope that you did sell earlier today before it got hit by the tune of 4. It's off 4% right now, and the lows of its base, meanwhile, are right around 148. So hopefully you sold at around 148, and if you didn't, you still can. It's never too late to sell. Don't get stuck into that trap, psychological trap that you missed the first sell, so you can't sell until it comes back to that level. That could be very costly. Over the years, both Gil and I have seen that kind of mistake being made by ourselves included, where you really need to learn to obey your sell stops and make sure that they're logically placed. Do you want to say anything about precious metals, Gil?
Yeah, I think a couple of things that might be going on here is, to me, the drop in precious metals, if it isn't a manipulation, it may be indicating that we're looking at a deflationary sort of crisis looming ahead of us. We've been talking about how we think that the whole housing thing is just created out of thin air, the growth in housing. They're not talking about foreclosures that are being held back in the system. They're also fudging numbers with respect to medium home prices rising. And so I think in general the economy is still pretty weak and it's very soft, and I think it's susceptible to sort of a deflationary dive. And we saw this morning the producer price index, the non-core number, and as everybody knows, the core number excludes anything that's relevant. The core number was down 0.6%, which is a pretty good drop. And I think that was probably one thing that might have unnerved the market. We also saw retail sales negative. Sentiment had declined. Business inventories dropped down to about 0.1%. And I think what that tells you, a lot of times people will look at business inventories and view that as a sign that you're going to increase production because businesses need to build up those inventories. So a decline in inventory sometimes can be seen as a positive in a good economy, but I think in this environment, a decline in business inventories may mean that businesses are starting to pare back because they're just not seeing, the buyers out there for their products, and so they're cutting back on inventories because they're afraid there's going to be very little sell-through, and so I think that could be what's going on. And you have to look at back when we had a big deflationary crisis back in 2008. And gold broke down. You see, these are gold futures, the nearest contract. Gold broke down severely. It hit a peak of about 1,029, I think it was. What was the high there? 1,033, 1,034 roughly, and then broke down all the way down below 700. And that's a pretty steep dive. That's over 30%, but might even be getting close to what, 35 there, Dr. K? something like that.
Yeah.
But in any case, that when we had that deflationary crisis in 2008, gold found a bottom in October, and if you recall, the market found a bottom in October, but then tried to rally and then rolled over to new lows. Meanwhile, the precious metals went in the opposite direction. So I think that's probably what you're looking at. My view on gold is there's no trade here. You could try and short it, I suppose, on the basis of a deflationary breakdown. But I think longer term, the precious metals will probably have to find some sort of bottom in here. They will find a bottom. So I'm not really looking at unloading physical holdings I might have, but those were bought around $300 an ounce, and they're still way up. And I didn't buy them necessarily as a trade so much as a hedge against currency devaluation or a crisis situation. Now the second thing we talk about is it manipulated? Well, that anybody can speculate about that, as Dr. K said, and I think that the Fed may do some manipulation. I think it's interesting that Germany asked to have 300 tons of gold that the Fed holds for it returned, and the Fed is telling them that's going to take 7 years to return 300 tons of gold, despite the fact that the Fed claims to have 6,700, over 6,700, 6,700 tons of gold of their own. So that's all sort of it's a little bit off kilter. It doesn't really add up. And I would think that with futures getting sold off, there should be huge physical supplies out there, right? But meanwhile, ABN AMRO Bank in the Netherlands is telling anybody who stored gold at the bank that they won't be getting their gold back. They'll be getting cash at the bid price. So, wonderful news from the bank if you stored your gold there. And so I think there might be a disconnect here. And, 1,500 for gold roughly would be a level I would look for it to hold, but you could go lower if we get into a deflationary crisis, and we'll see what happens. I think when you're looking at the indexes, yesterday you saw by the end of the day you had an increase in volume, and the index on the NASDAQ was up, but it's not making a lot of progress, so it's a little bit of churning there, and it's run straight up off the bottom, and it's been kind of like what we call this flying V market. You get a V here, it turns around and runs higher, another V. And then this last V, when the market really started to look ugly. Now, what was different about this sell-off here a few days ago is that it was accompanied by a broader breakdown in leaders. And I think, to me, that makes the rally a little bit suspicious. But, if we get a resumption of the rally and I see a few things that might be viable, I am not averse to taking some small positions and then seeing what happens. If they don't work out, I just blow them out real quickly. And I think your max risk there is maybe 1%, if that, maybe 2%. On the downside if the positions don't work out. But in this environment and with this sort of action here and with a lot of leaders breaking down, and you're seeing yesterday the advanced decline line on the NASDAQ actually was negative despite the upside action in the index. You're seeing it narrow, and so I think that creates some problems, but it doesn't mean that it can't go higher with narrowing leadership. So you try and take some positions perhaps and buy into the resumption of the rally in measured fashion, but if it doesn't work, I think you're running for cover in a hurry. So, that to me, that's really what's summing up the action right here, and it's a very difficult market to play. And wouldn't you agree, Dr. K? I mean, this just seems like its own bizarre world right now.
Yeah, I mean, this is every year it gets a little bit more puzzling, and so we're dealing with these aberrations as they come. QE, the manipulation of QE puts a floor in the market, but then there's a lot of uncertainty, which puts a ceiling on the market. So we have a lot of these flattish uptrends, as can be observed in the NASDAQ, and that makes for, even though we're getting a market that's baby stepping higher, and therefore over an entire quarter you can say the market's up a few percent or several percent. That belies the challenging nature of the environment, because it really is quite flat, and a lot of these leaders have issued buy points and then they just immediately stumble. So there's not a lot of window. We talk about the window of opportunity, and it's not open right now. That's not in a traditional sense.
No, and like I said, I'm okay with taking a few positions, small positions, maybe 10%ers or so, and if they don't work, just blow them out and just go back to the drawing board. My guess is the next really good signal you're going to see in this market, or a really good trend, the next really good trend is going to be to the downside. So, but we don't always get what we wish for, and so we'll wait and see when that happens. But like I said, a little churning action here on the NASDAQ, If we look at the S&P index here on a daily chart, let's see what's going on here. These are all messed up. Straighten this guy out. Here we go. And you made a new high yesterday on the S&P on lighter volume. So, it's a very sharp move. I think you catch a lot of shorts, but it's sketchy, and unless you can find things to play and they work, then I think you just blow out and just go back to cash and rethink it all. So that's basically where I'm at, and looking to deploy on the short side. I also watch the VIX model. Dr. K, what are you on right there? Are you on a cash signal or a buy signal on the VIX, or a sell?
We're on a sell signal.
Okay. See, I would look at the VIX right now, the VIX. I'm looking. Let's take a look at this. I'll just use the UVXY. You got a buy signal a little while ago on the reversal back up, so I thought that was playable there. But you're up a dime, big deal, and we'll just see what happens.
And that's an intraday model as well, which is completely. I mean, it's going to have lots of signals: buy, sell, while the model is going to sit on either a buy or sell or cash signal for.
Right.
On a sell signal, it could sit for a number of weeks. I mean, in the tests I've done, and in actuality, it has done that a number of times. So, it's trying to play the trend, the downtrend or the uptrend. But the uptrends tend to be short and sharp and pose much higher risk. So the model adjusts for that, and often will not take the buy signals unless everything's set up just right.
Right. So I actually think with the next buy signal, you may find a buy signal down the line here that's going to be very profitable. And I know there was one, somebody emailed us that they made 70% on one buy signal a while ago. I think was it late last year, probably when the market was coming off, I believe. But that's the sort of thing I think you have to be patient and just watch for. I don't know if you can press anything here. Things that kind of screwed up. I'm going to take some questions now on individual.
We had that one question about the Livermore Century rules. That was
I'll use a stock like Celgene as an example, and the question is, what is the duration of the move after? There really is it's never really been measured. It's just a rule that Livermore used to use, that if something breaks through the 100 price level, the 200, 300, 400 price level, any 100 even round century mark number, you would buy the stock with the idea that it should scoot up out of there pretty quick, and he would be looking for 20, 30 points, but I think he's probably buying $300, $400 stocks. I think you might look at 10, 20 on something like, say, a Celgene, and it runs up, and we bought some of this in here, and then I thought selling it in here a little bit early, but still making decent money. That's kind of what you would look for. And so you get that move, and maybe you back off and let the stock base. It's also up 20% from the breakout from this area. So it's kind of contextual, but there's no hard and fast rules. This kind of gets us back to this old thing of everybody wants some sort of black and white, something you can measure out precisely, like an engineer or something, and come to these exact rules regarding these really what were, for the most part, general rules that Livermore used and operated on. So, and he used his judgment watching the tape and when he should sell. And I mean, in a lot of cases, you might have that initiate a big move to the upside, and you'd have to say that when it came to a stock like Apple, way back when it finally cleared 400 with some authority here, that started a move that turned out into a huge upside jaunt. So you can't really start labeling these things ahead of time and deciding what the average duration or the average upside move, the thrust, and all this other stuff. It's just not that sort of thing. So someone's asking about these stocks. I think this is typical of what you're seeing. A lot of stocks trying to come up off of lows, and they run up, you get a pocket pivot. I think, where was it? Right here. This one just barely cleared. And it's a little bit V-shaped, so it runs up real sharply, and now you're pulling back. I mean, you could also say you're looking at let's look at a weekly chart here. You could also say you're looking at Head and Shoulders, and this is just a rally up the right side. But it seemed like that's what you were looking at the other day on, I believe it was Wednesday, you're seeing a lot of this sort of action in stocks trying to make the turn. I know there was Proto Lab. Somebody asked us whether yesterday's action was negative, and my response to that would be simply that one day is one day. And given the fact that the thing had gone from under 44 to over 55 in a matter of 5 days, or a span of 5 days, and you know, it's a very volatile, thin stock. And you had an article, was it in the Wall Street Journal, Dr. K? And I think there were some analysts out there touting the 3D space and saying that there aren't that many opportunities to capitalize on this rapidly growing area, blah, blah, blah. And so a thin stock like this will get sent to the upside, and you get a breakout, but the breakout's failing now. So within the context of this reversal and today's action, then you would have to say, yeah, that is negative, and this thing probably isn't going to work. So, but you know, in and of itself, if you had bought the breakout, would you necessarily be selling here on that reversal? I think what I would be doing is if I had bought this breakout close to 50 and it runs up like that so rapidly, and I've talked about this many times, I would take my profit, because I think this is mostly a trader's market, and you're trying to pick up 10, 15% moves in stocks, and if you get them, you're just out of there and just move along. So take your money and run. Somebody says in Minnesota we have snow on the ground. Doesn't Minnesota always have snow on the ground? I think I was there once in July, August, and it was like ridiculously humid. The mosquitoes are the size of pigeons. So I don't understand why anybody would live there, but you know, that's just me. Dr. K, how close to a sell in MDM given the NAS follow-through day was marginal in yesterday's stalling action? I also like this comment. When I squint my eyes while looking at the chart, I think I see the face of Satan. Is that the gold chart? Probably. But what, you got an answer on that one, Dr. K?
Yeah, I mean, it'll switch when it switches. I mean, we certainly right now we have a number of distribution days, and so you know the model is watching for any further deterioration to switch to a cash signal. As far as sell signals, it's very on guard. I mean, the last time the market went lower, which is just about a week ago, a little over a week ago, the model refrained from going to a sell because it's factoring in the QE floor, and so it was right to not go to a sell and just to remain in cash. And then the market heads higher, so then it bounces back to a buy signal. And so the question is really when it's going to go to a cash signal, and it just has to see further evidence of a breakdown from here on. And as far as sell signals, yes, it will go to sell signal, but it really needs to see an acceleration to the downside before it will do that.
Right, and somebody asked a question, let's see, given the deflationary environment, well, we don't know necessarily that we're in a deflationary environment. We need more confirmation of that. But they're asking, can you comment? Let's assume that we are, if we are in a deflationary environment, they're asking, can you comment on ideas you are using or considering to play on deflation? Well, I would be looking at trying to be short stocks, short the market. So you probably coincide, that would probably coincide with a sell signal on the market direction model, maybe a buy signal on the VIX model. So those would be ways to capitalize on a downside move. And I think a deflationary environment is one where you're susceptible to seeing the market come off. And so it just becomes a simple matter of looking for ideas on the short side, you know, basically playing the downside one way or another. So someone asking about NSM as a short. I think, you know, like this is forming this sort of head and shoulders pattern, rallies up into the 50-day moving average, becomes shortable. And so that could have been hit there. Another one that ran right into the 50-day moving average yesterday was Coors, and today with the retail sales being pretty poor, this is coming off pretty hard. It's possible it's headed for the 200-day moving average. Hard to say, though, very choppy in here. And I'd also have to say that the short side of the market is not necessarily the easiest thing to pull off right now. You know, we had talked about last week that I might have a special webinar to talk about short ideas if things started popping through my screens, and the problem was that nothing really popped through my screens, and then you get a sort of a resumption of the uptrend, follow through, whatever you want to call it, in the indexes. That kind of puts the kibosh on short selling in the short term, but you may be coming back to it once we establish some sort of a downtrend, and I think we're a ways away from that right now because you're really only here with the indexes, and you can't say that we're in an established downtrend or an environment that would be entirely conducive to short selling, you know. But there are always opportunities to short stocks, individual stocks, in any kind of a market. And we've seen that because we've seen Apple work as a short sell, and it stayed pretty weak even throughout the rally of 2013. Since January, it's been a big underperformer. We saw stocks like Netflix in 2011 break apart, and just looking at Apple right now, to me it looks like it's going to break out to the downside. That's what it looks like it wants to do. It hasn't done that yet, but I think that's something to watch for. It's tested that 420 low once here. You came down, you undercut this low, caused a rally up to the 50-day, couldn't hold the 50-day, breaks down. So it's still, in a long-term downtrend, and if you look at it on a weekly chart, I think it's probably heading lower, even though at every point along the way, everybody wants to try and pretend that the stock is cheap and buyable. I mean, everybody still wants to buy Apple on the cheap, and I think that probably means it wants to go lower. Let's see here. What else? SBGI, I mean, this is a stock, it's going straight up, so there's really not anything there. Is there some buyout going on with this, Dr. K? Was there another stock in the group that was bought out? I think that was the case, and so now every stock in the group is going higher. But, what I don't understand what there is to comment about that. It's a stock going higher. I don't even think it's something that we would consider because, let's see, now the earnings were up 157%. That was breaking out at around the $15 level. Let's see. Next quarter's earnings are a negative 52% growth. I think that's one of the reasons why it doesn't make it through my screens. But they've been seeing some strong increase in revenues recently, and so that's been driving the stock higher. But, I don't know if this is a climax top. And obviously, I don't think it is. And it's just up there in the air, so I don't know. There's really not anything to say about that, unless you're expecting us to tell you that, oh, it's top now and you should take your profits, because we have no idea. United Technologies. I think United Technologies is just one of those QE stocks that's been moving higher, even though I think these guys have, what, 4% earnings growth? No, negative 10% earnings growth in the most recent quarter. So I really kind of look at that as a QE stock, and it's just moving higher on that basis, and that is what you've been seeing go higher in this market. So that it makes sense to me that that's what's moving, not necessarily that I'm going to buy it. Another one is WOR, Worthington Industries, probably similar, diversified industrial name, similar to UTX, but that's the kind of stuff that you're seeing going up. That has better earnings growth, 41%, metal processing and fabrication. Next quarter's earnings are expected to be down 11%. Sales were up a whopping 1% in the most recent quarter. So, that's the kind of thing that just does not make it through our screens because of the deficient sales growth or the deficient estimates. But, and also the lack of any kind of a dynamic theme that might create some upside, like you might see in a name like Splunk, for example, which even though it's not making a lot of money, expected to lose money next quarter, the stock is acting okay. Despite that, but it's a more dynamic situation. These other names like UTX and Worthington Industries, they're more established industrial names, and I just don't understand why something with 1% sales growth is moving higher unless it is something of a quote QE stock, and that's kind of how we look at that. Dr. K, I guess because you're half Japanese, everybody is asking you about Japanese stocks. The only thing I would say is we wrote an article in Market Watch about Toyota and Honda, and basically said if these things don't violate their 50-day moving averages, they're probably going higher. And you'll notice it closed right at the 50-day, so next day it closes below the 50-day. No violation, turns around and gaps higher along with the Japanese market, and you're off to the races here. Dr. K, any comments on the Japanese market given the all-in QE that's going on there?
Yeah, I mean, certainly bullish, and we're seeing that uptrend. And the anticipation of the changeover in leadership into a more relaxed easy money policy started this uptrend a few months ago in the Nikkei. So, obviously companies like Toyota, which are massive, it's a $200 billion company, it too started on its uptrend in November of last year. And since then, it's up a good 40% here. So, yeah, I mean, don't fight the Fed, even if the Fed's Japanese. Don't fight the central banks, really.
And they're actually doing, what, $48 billion a month now? No, what is it? $78 billion, I'm sorry, a month of bond buying, which is a little 7 billion below the Fed's 85 billion per month, but compared to the Japanese economy, that's a pretty huge amount, isn't it, Dr. K?
Yeah, I mean they're the third largest economy in the world, so that relative to the U.S. that's a huge amount of buying on the part of the Japanese.
Yeah, but
So, yeah, it's naturally affecting their markets in a huge way, and as long as they keep that up, it's probably going to keep heading higher.
Yeah, and see, stocks are rallying in Japan, I think, on the basis of an inflationary rally and all this QE, and maybe it's more like 2009 was for us, because we have all this massive QE, and you're still seeing this sort of shallow trend, whereas the Japanese market is going bonkers to the upside. You can also see on the EWJ, the Japan Index Fund, if you look at it, Toyota Motor looks pretty much the same, so there's high correlation there. But that's an example, I think, of a market that's experiencing a sort of a hyperinflationary, or at least an inflationary push to the upside, and I keep wondering to myself whether that's something you would see in the U.S., but so far we really haven't seen it. So,
and the yen's been very strong against major currencies for a long time, so it has a lot of headroom to get weaker. I mean, the Japanese have a lot of headroom to make it considerably weaker than it's been.
Right. Here's a question for you, Dr. Cape. Biotech and 3D stocks were the most responsive to the recent follow-through day. Is this a sign of excess speculation or a new secular trend?
Well, biotechs often have a mind of their own. There's periods in market history where the markets are going lower and biotechs are moving higher, and so we're certainly seeing a lot of strength in various biotech leaders like REGN, BIIB, Biogen, ALKS, VRX, and so on. And I don't see that as being an overly speculative environment at all. I mean, I think investors are more risk-off right now, and that puts a ceiling on this uptrend. In other words, the uptrend on the NASDAQ's been very slow because people aren't really confident enough to commit some real funds into the market. But meanwhile, QE, stair steps or baby steps, the market's higher, and also puts a floor on the markets when there is bad news, say out of Europe, and another domino topples. The market will fall, and the price volume will show that it should go lower, but yet it finds its footing and then starts to drift higher on the QE fumes.
Yeah, I think the biotechs, there's a lot of the big biotechs moving. Biogen continues to move, Celgene, Amgen, the whole group is moving, and obviously money is flowing in there. I'm not quite sure what it means, but I don't think it's necessarily a sign of excess speculation, because those are big cap names and established drug companies. You have some others like Regeneron, which had a pocket pivot, and this is one pocket pivot that you've seen actually work pretty well. And there's been a few, even Seattle Genetics has broken out to new highs. So it's pretty broad. We go back to the Centaurus. It's kind of muted here, but that's a drug company, and no real volume here. But so that looks a little bit sluggish relative to the group. But I don't think it's in the group. But those look very strong right now. So is it a sign of excess speculation? Boy, say that 10 times faster. It gives me trouble just once. But I don't think so. But, and if you're asking the question, is this a sign of a market top? Not necessarily. It's a sign of an area that's acting pretty strong in the market regardless of what it seems to be doing. So it's just something to keep an eye on. If you own any of those stocks, I suppose you can still hang on to them depending on what your profit objectives are for the position. If you look at the three...
And Regeneron actually has triple-digit earnings growth, so the price where it's at right now is justified by the fundamentals.
Right. So, that's not necessarily speculative. Now, on Triple D, is this indicating speculation? Well, what it's indicating is the stock has come down a huge amount, and now it's trying to come up off the lows. Does that mean it's going higher? Not necessarily. Stratasys was probably the best name in terms of showing a pocket pivot the other day coming off the lows, but really the leaders in that area would have to be considered Proto Labs, but that breakout's faltering. And then, of course, X1 company, which I love this one. And I even bought some of this right along the lows. But, you get that kind of move, you're going to take a profit. And it just looks ugly when it does that. And it's very volatile, and it's relatively thin. I don't know what the average volume is. Maybe I'm going to guess somewhere around 500,000 or 600,000 shares. But those are the leaders in the group right now. But they're thinner, more volatile names. So I'm not sure if this is the start of a secular a trend. So, and I'm not even sure what a secular trend means with respect to a specific stock. I think the term secular trend regards is more applicable to what indexes are doing in bear markets and bull markets. Somebody says, here's one for you. The tracking error of the UVXY is astronomical. The VIX is up 6%, while the 2x UVXY is only up 3%. Yeah, and I agree. A lot of these ETFs are pretty cheesy, and so don't really get too excited about playing them. I never really play them bigger than, say, 10 or 15% of my portfolio if I'm going to play them for a move. And they've had some good moves, but a lot of times the UVXY will lag and then it'll catch up, and so it'll actually start moving higher, and maybe the VIX isn't continuing higher. But yeah, there's a lot of funky action that goes on here.
That's the whole point though behind the VIX, and you can't. I don't even think they call it tracking error. I certainly wouldn't say that because the UVXY and all these ETFs or ETNs, they're not designed to track the VIX, and that's what the model has discovered. It takes that into account. That what there is there's a downward bias in some of these instruments, and so that's why the model will take sell signals more often than it will take any kind of buy signal.
Yeah.
For a buy signal to work, other factors have to line up. So for every buy signal that the model will take, it's probably going to take at least 5, if not more, sell signals, just because it's watching for this downward bias that's inherent in instruments like UVXY and VXX. As far as the VIX, if you try to use the VIX as a measure of where these other instruments are going to be, then you're going to get into a lot of trouble, because if you just look at the VIX chart, you look at a daily or weekly, and you'll see that there is really no very loose or very little correlation between the VIX and, say, the VXX.
Yeah, you're right.
In a pronounced downward bias. So all that's factored in the algorithm that makes up the model, and it's just a matter of capitalizing on some of these downtrends that are clearly prevalent in these kinds of instruments.
Someone asked, what do you make of this increasing whipsaw action we are seeing now? Well, I think we talked about, you mentioned PRLB, Priceline also had a breakout, but I wouldn't say, that's whipsaw-like. I mean, stuff's just jerking around back and forth, and it breaks out here, but that's not really a very strong breakout. And so I think, but this could just be another QE stock on the move, a big cap name, and that's what they're buying. EQIX running up and has pocket pivot actually 2 days ago, and now it's pulling in, but that would be considered normal action right off the bat if the market isn't running higher also. So, but I think it just speaks to the whole idea that here's one that this just broke apart and never really went anywhere. So this thing's definitely done as far as I'm concerned, and I wouldn't be touching this with a 10-foot pole. But yeah, the market, as this one individual comments, this market has gotten to be like Jason on Halloween with Jamie Lee Curtis. I don't know. I think if Jamie Lee Curtis were in this market, maybe it's just more like Jason. I think if Jamie Lee Curtis were in it, it'd look a lot better. So I hope that's not too sexist of a comment, but. I should actually tell a story. I almost ran over Jamie Lee Curtis once back when I worked at Merrill Lynch in Beverly Hills. And I back then, when I started at Merrill Lynch, I used to drive a little Dodge Colt, which is basically just a tin can with wheels on it for the most part. But I was rounding the corner off of Little Santa Monica and making a right onto Rodeo Drive. And, I used to drive pretty fast when I was in my early 30s. I think I still do, don't I, Dr. K? I don't know. But in any case, I round the corner and I immediately had to slam my brakes on because I almost turned Jamie Lee Curtis into a hood ornament on my Dodge Colt, which admittedly probably would have increased the value quite a bit. But got very close. But that's about the closest I've gotten to Jamie Lee Curtis in my life, and I'm glad I didn't take her out, though. I'm not sure if the car was big enough to take her out, but in any case. And yeah, she looks as good in person as she does on TV. Anyways. But I remember those movies. I think the one I really liked her in was Trading Places with Eddie Murphy and Dan Aykroyd, if anybody remembers that. And I remember the one scene that something about rent and food are not free here. Neither is this or something. But anyways, you can all visualize that in your own heads. I won't go on. and belabor that. Qcore is, I don't know what to think of Qcore. It looks like a short, doesn't it? But probably not here. You probably wanted to catch it on the break of the 200-day moving average. That's my take. Lulu, is Lulu a short? Running up in here to the 200-day moving average. I think if it can break down below the 200-day moving average, it's been very persistent. You know, but it is a late-stage failed cup with handle. You get another rally up into the moving averages, possibly. And of course, any short in this stock or any other stock you see rallying is going to be contingent upon the general market if it's going to be successful. So, Chewy's, you know, this one's pretty funky too. It's a very thin stock. That's why I avoid it. Trades 219,000 shares. You got this big, you know, looks like a reversal type pocket pivot. We didn't put it out because we just don't trust the stock. And now today they're hammering in on pretty heavy volume, so you don't want to be there as far as I'm concerned. Dr. K, you agree with that?
Yeah, absolutely. And it's also had a mini gap on volume today, so
yeah,
it looks troubled.
I like this one individual there. You know, when we have the IMs, the instant messages coming in on GoToWebinar, and it shows up on the little window that we have here, everybody's name is shown in the right side, so we can see who's there. Oh, I can see our old friend John Teed is up there, and Thorne is up there. But I like this one asker. That's what the column is. It says question and then asker, and their name is Tired of This Market. I love that one. And they ask, McDonald's and General Motors best action. What does that tell you? Poof, junk food and government-backed dumpy autos. I agree. It's a QE market, and they're pushing up these big QE stocks. You know, we talked about UTX, Worthington Industries, other stocks like that. General Motors. I mean, that's a piece of junk, and that's what they're pushing. So, you know, somebody mentioned the fact that it's European buying because what you see moving up are big cap stocks that pay dividends, and that's what Europeans favor. Now, Dr. K, living closer to Europeans than I do, other than the transplants that live in California, what's your take on that? Is that a European predilection to be buying dividend stocks, big cap dividend stocks, and so that's the money that's moving into our markets right now?
Well, I mean, I would first say that no matter where you live in the world, it doesn't matter. If you live in a country, it doesn't mean you have any more insight than someone who lives outside the country, because information is pretty much a commodity these days. So yeah, it's totally irrelevant. As far as what the Europeans do, I don't really care. I don't see any particular sign that they're putting so much buying activity into these names. I think that these names are just generally more stable, and so the market likes them in this kind of uncertain environment. So that would apply to Europeans. It would apply to any place that wants to invest in the U.S. that has money that can influence the price of the stock. I also wanted to make a quick comment on that CHEY stock, that the gap down, the mini gap, is actually caused by a secondary offering, and where it's pricing 3.4% to discount. So that mini gap is not a problem for the stock. It's just due to the secondary offering. But what I don't like about the stock, it is thin, and it is a small cap verging on micro cap, and that's not the type of name I'd want to be in this kind of market.
Right, right. Somebody asked what I think is a pretty interesting question, because I was noticing this because I subscribe to a service called DecisionPoint.com. And DecisionPoint basically has all kinds of data on the market, and Carl Swindon runs that site. I think he's turned it over to his daughter. But it's a great site if you like to look at a lot of different indicators and charts. And one of the things that they show are these investor sentiment from both the advisor sentiment and Wall Street sentiment, and also the AAII, the American Association of Individual Investors. I once heard somebody say American Association of Idiot Investors, but I don't know if that's necessarily always true, because I know a lot of smart individual investors out there. And I think everybody on this webinar right now is a smart investor, individual investor. But what we notice here is if you look at this chart, if you guys can find it anywhere, you have right now 54.48% bears, and that has spiked suddenly, while bulls have declined to 19.31%. Now, what do individual investors know? Dr. K, can you comment on this? What do you think of this? you were running 40, say 45% a few weeks ago on bulls and about 20 to 30% on bears, and now suddenly you have 54.48% bears and 19.31% bulls among individual investors, according to this poll. What's your take on that?
Yeah, I mean, when you get a big jump like that, it smacks of a lot of fear out there, and that would indicate that we're due for a continuation of this uptrend that's been pushed higher by QE. So that's a lot of bears to accelerate to that level so quickly. And,
yeah, it's very interesting.
The masses don't know what's going on, or the market fools the majority of the time. So that's a good indication, on a sentiment basis that we're going to go higher.
If you look at the Investors Intelligence Advisor sentiment, that one is running 50.5% bulls and 20.6% bears. I think that's serving. There must be something wrong with their methodology there. That's what I have to think, because I can't think that everybody's suddenly gotten bearish. But there is a case to be made for this market where individuals have a tough time making money, and so if people are feeling that way, then that may show up in the poll. So I don't really know for sure. Krispy Kreme donuts continues to just base. It's moving sideways, and I guess at this point it doesn't seem to hold its 10-day moving average. So you'd be using your 50-day moving average as your ultimate selling guide. LinkedIn is trying to break out. I'm not so sure about this. I'm also not so sure whether I want to hold it into earnings or not. Unless I had a big cushion, but it is holding the 10-week. The only problem is you're not really seeing any volume off the 50-day line, or off the 10-week line. And the 50-day line up here on the daily, so if we kind of line these up, you can see the 10-week line here, the blue line, it did bounce off of, but if you're looking at the 50-day moving average here, it's still well above. Now, yesterday, earlier in the day, we were trading some decent volume, and it looked like the stock might come out of this little flag formation. So I actually bought a little position there, but it's not really happening here, so I'll just back away and look, because there was no real follow-through in the volume by the end of the day. You got close to average volume, but you need to see some thrust off of the 10-week line, and the risk here, I think, is that if it doesn't get any thrust off the 10-week line, then it may go down to the 50-day moving average and test that. So, that's a good 10%, roughly, is it about 10% lower? A little less than that, 6-7% lower from here. So sitting through that without any upside move. Remember, I'm not worried about buying low or buying at the cheapest price. I'm more interested in buying at the right price, and I want to see something start to move after I buy it. If things get a little shaky and what I was expecting doesn't follow through, then I just back away from the stock. Remember, my view of the market, and I think Dr. K agrees with me on this, is that liquidity in the market, the ability to buy and sell things very quickly, and pretty much at any time during market hours, is an advantage, and you should use that to your advantage rather than buying stocks and getting married to them, because the liquidity of the stock markets is really one of their big pluses and what makes them attractive relative to other asset classes such as real estate, which anybody who's been stuck in a house knows how that one goes, and also art, for example, or other collectibles and things like that. They're not as liquid, and so the beauty of stocks is they're very liquid. So the key is to catch something when it's beginning a trend, and if that starts to falter, then you probably want to back away and look for a better confirmation of strength on the upside. So that's kind of how I view LinkedIn right now. Chewy is having a 3 million secondary offering, somebody says today, so that's one of the reasons. Maybe that's what it needs. I think it's been a pretty thin stock. It's been one of the thinnest stocks. What's the flow right now? It shows O'Neill's showing 6 million. So that's going to add another 3, so you have a 9 million share flow. It's still a very thin stock. But if did they announce the offering? You want to check on that, Dr. K? What is the deal on that?
Yeah, no, I said, I just...
You mentioned that?
That person's comment, it must have come in very early.
No, they priced it. They priced it, yeah.
Because I said that it was priced at a 3.4% discount. It was a secondary priced at 3.4% discount.
Right,
that,
and the interesting thing
that was causing the mini gap down. So that person's comment must have come before I said that.
Okay, and the interesting thing here is that it's actually reacting poorly to the release or the dumping of the offering into the market. And that's a fair bet. If you had a 6 million share float, it's already a thin stock, and now you've got another 3 million in there and it's not absorbing it all that well today, it's coming off, then I don't know if that's a negative for the stock or not, but I think ultimately you're using the 50-day moving average as your selling guy. End of story. Is FLT acting okay? I don't see anything that isn't obvious. It wouldn't be obvious to anybody else. It's holding above the 10-day moving average, so that looks fine. I mean, I haven't seen it do anything else like limping or wheezing or coughing or anything like that. So outside of what the price volume action shows, looks like it's holding up okay. CMG, somebody came out yesterday, I think it was a hedge fund manager, and panned the stock. But it's trying to come out. It was tight along the 10-week moving average. It's trying to come out of here. So I'm not so sure. I would assume that it's a short, or I'm not even sure I'd go long in this. You got any comments on this, Dr. K?
CMG. It's really not some. I really don't like it. Just look at the the gap downs in the stock, and now it's trying to go higher, and then had a really negative day yesterday. So it looks a bit too random for my taste.
Yeah, I think there was a hedge fund manager yesterday who made the comment that there's no such thing as a gourmet burrito, and I would actually beg to differ. If you're Mexican, there's your plain old bean and cheese burrito, and then you can do things like mix in things like what we call lengua, which is a cow's tongue, which is I think really good, and to me that's a gourmet burrito. But I guess to each his own, and maybe in terms of Americana or food that has become so Americanized that it doesn't really bear much relation or resemblance to real Mexican food. There probably isn't anything like a gourmet burrito. But remember, to Mexicans, you add something like cow tongue, not only is it exotic, but it's a gourmet burrito. So let's see. Any other questions here? That looks like we're running out of questions. Somebody's asking, if one European country is going to burn the furniture, sell gold to stay warm, how many others will follow? That's a possibility too, that you're seeing selling come out of somewhere else. I mean, you don't know for sure. All you can do is watch the price volume action. Notice how, though, the futures are getting support at the 1500 level so far today. So not sure what that means, but it is holding that level, and we had talked about that being a longer-term support level. Hasn't it come down to there before? Back?
1531.
Yeah, this is actually the lowest level it's been at since it started correcting well over a year ago. So
yeah,
interesting.
It's really undercutting that low of 1531.
Palo Alto Network. Somebody got some of the thoughts here. There's really nothing too much here. Here's the weekly chart here. So there's no pattern here that's viable. It's all breaking down and looking pretty ugly. So not something I want to mess with right now. So you can see the market's trying to get some support in here. So it's not like it's coming apart, but again, it's still a dicey, sort of funky environment here, and I'm not really sure it's even worth playing all that much. Let's see. Any other questions? I think we pretty much got it. Somebody's asking Q-Core short. I think we talked about that one earlier. You're basically, one of the things here, like I said, is you want to short it, try to short the rally once it breaks down through the moving average here or in here. Now that you're down here, you're on top of this little area of support, and it may bounce up there, so you're a little bit too extended on the downside. GLT is the iShares Barclays 20-plus year Treasury ETF. What's that looking like, Dr. K?
TLT.
Yeah.
It's all this buying is pushing it higher, and the yield's lower. So and Japan, of course, what it's doing is also helping push these higher in price. So that should probably continue.
Yeah, so kind of blah there. Fake book. Here's the thing. The way I see it, you had a little pocket pivot right here, bottom fishing pocket pivot. It's kind of faltering here. You've got some resistance. So, I tried buying a little bit in here, but it's not really working out for me, so I'm not interested in holding it. And I think right now you're sitting right on top of the 50-day, and that it would need to hold that in my view if you had this pocket pivot. But the one problem for me here is if you have this pocket pivot, and let's say you buy it in here. Now you're below where you entered, and by my book, if you come in and buy a pocket pivot, if it drops below where you come in, then the advantage of coming in early to me is sort of diminished, and so I'm not interested necessarily in hanging out and just let it set up. It may need more time, maybe, if it's going to round out a base, but this is another one of these situations that's trying to come up off the lows of a base, and it may need more time, so we'll just see what happens there. Workday, this is more of an opportunistic trade as I saw it the other day, buying it along the 50-day, and now you got to move up 3 days off the lows. You're diminishing volume, so I think it becomes a sell up in here on the bounce if you're a short-term trader. But not, if you're playing this, I remember this would have been Wednesday. They priced, they didn't price the sector. They had 63 million shares coming off a lockup. And what happens there is they're opening it up closer to 55, 56 at the open. And that looked to me like what happens is the company's got all these shares that insiders now want to exercise their options and sell and whatnot and unload. So the market makers will say, well, I'll take you out here between, say, 55 and 56. They clear everybody out, and then they rally it. And so this to me looks like that sort of a rally where they just clear out all the sellers in the stock. You get support at the 50-day moving average, but now you're coming up into this area of resistance. And if the market's a little funky here, it's a good bounce, but I'd be watching for this to pull back into the 50-day moving average. So Whole Foods Market, WFM. Kind of a slow name. It's up into the 50-day moving average. Does it become a short there? Maybe, maybe not. Maybe it just goes tight sideways. But you do have this big gap down. So not really a name I've been looking at on the short side. But you got this rally right into the 50-day moving average. Maybe it's shortable. But again, I don't know if you're going to get a lot of mileage on the short side here. And you may not get probably not a lot of mileage on the upside, on the long side. But I think that for the most part, until the market breaks down, there's not going to be a lot of luck or a lot of progress you made on the short side. Have both of you considered setting up an equivalent instrument to BRK and IEP? What is that, Berkshire Hathaway? You mean you're talking about an investment company? Icon Enterprises? No, I haven't considered doing any of that. I'm not a buyout expert, so I don't really know. The market gives me enough trouble most of the time. What you say, Dr. K, we certainly won't want to get involved in leverage buyouts like Carl Icahn and all that other stuff. So URI tries to break out here, and the breakout falters. So kind of same story, Soda is interesting. You had a big move up off the lows, so you go up 1, 2, 3, 4, 5 days in a row. You stall out on the breakout, a little bit like PRLB. Coming in now, volume is not heavy. Now, one of the things I notice about this stock is it has 6.6 days of short interest, which I think works out to about 7 or 8 million shares on a float of about 17 million, I believe. So this thing's pretty heavily shorted. If it starts, I think what happened here is you got a lot of shorts running in the cover here, and that's basically what was going on. And so they're running it up, and now the thing's coming back in. I think if it starts to turn around, it may go higher. But it's we talked about this before. You have thoughts on this stock, Dr. K?
Yeah, Soda's been, it's coming out. It's had a lot of trouble, and it's trying to come back through, through this basing pattern it's set up. The last quarter earnings was only up 13%. And institutional sponsorship declined in the last quarter as well. So it's got some issues associated with it, but it's also got a lot of positives as well. So, I mean, again, I tend not to like these kinds of names because it's, if you look at the weekly, it's not hitting new highs, and it's had a lot of, prior to this, it's a very sloppy pattern, and I would think that the sloppiness would continue, so I shy away from it.
Yeah, I think the shorts would tell you that the sloppiness has kind of undone them as well. So, all right, let's see. What else we got here? Somebody's asking about WDY. What is that, Wendy's? not coming up. My E signal as always is. Let's see. That's not a stock, so I don't really see that. That's not a symbol. Maybe you want to send us the correct one there. FXY and DXJ moving in opposite directions. That's what we're talking about on Japan. Let's see. Oh, I already talked to this Workday, WDAY. Yeah, it's acting okay right now, but you had this move up, and you're running up in here, and you're declining volume. So to me, that was a trade off of there. See how much you get off of it. But it's still a thinner stock, and I don't really understand the story on this because they are losing money. So, but I've seen some pretty strong institutional names move into the stock. You've seen Fidelity coming into it. Jeff Vinnick's been coming into it. But I saw an article on the Wall Street Journal about Jeff Vinnick, and I guess he's been having problems in this market. So maybe not necessarily a as a guru as he used to be, or maybe not as focused. I understand he owns a part ownership in the Boston Red Sox, which some might say is he's a glutton for punishment there, but he also owns a Tampa Bay hockey team. So, but I think 3 days up on the bounce. If I bought it off of here, I would probably be selling into this move. Mellanox got an upgrade mention. Bottom feeder. No, I'm not really going to touch this thing with a 10-foot pole. I mean, you're way down here, so. Next quarter's earnings, I think, are going to be, what is that going to be, Dr. K? Negative 91%, 4 cents a share. So, let's see. Somebody's asking if PRLB finishes above its 10-day moving average, can it be considered a pocket pivot? Today? No. Right, Dr. K?
No.
No, I mean, this would be considered a pocket pivot when you're coming up through the 10-day, not when you're coming down to the 10-day. And the volume is, the highest in the last 10 days, or higher than any down volume, because it is down volume. So no, this doesn't even meet the definition of a pocket pivot at all. Somebody asked us, what would you do with PRLB if you bought? Well, it depends on where you bought it. If you bought the breakout at 50, you're failing. So I don't. For my own money, if I had done that, I would just be gone. That's up to you. So sit tight. But if we told you to sit tight, though, does that imply that we know it's going back up? Like I said, my view is if it's going to break out, it should hold the breakout. If it can't, that's not necessarily the thing that I want to see. And so, I'm out of there. If you want to sit with it and you gave yourself, you're going to use the 7 to 8% rule to sell the thing, then I guess you could do that. But again, it's a very volatile stock. It's sort of moving on an article, an analyst. Mentioning some positive things about it. So, WTR, has water become the commodity to buy? I guess so, but it's extended now, so I'm not going to buy it here. What's the best way to play Japanese QE or stay away? I mean, we had wrote an article about Toyota Motor buying Toyota Motor as a way to play Japanese QE, but I'm not that familiar with the Japanese market in terms of the components. Dr. K, you got anything to say about that?
No, I'm not. I don't do things with the Japanese market, so I really don't want to comment. I've been investing in the Japanese market in ages. It's just not. It's looking interesting. So again, things have changed for the better.
Right. But if you were going to buy into it, if you thought there was further upside, you just buy the EWJ, right? Because what's the difference between that? Say the Toyota Motor looks like that, and the EWJ looks like that.
Yeah, they're one and the same.
Yeah, for the most part. But
again, I don't. That's a fundamental play, and I'd rather marry fundamentals and technicals like I always do, rather than step outside of that and say, well, it looks like it's going to just keep going higher, so I'm just going to blindly buy it up here. That's stepping outside my discipline, so I'm not going to do that. But it certainly looks like it's going to go higher.
Right. Somebody also asked us when our new book on shorts is going to be published. Well, we have to write it, so we haven't gotten around to writing it, and I don't really plan on starting to work on another book until later this year at the earliest. And maybe by next next spring or summer it'll be you'll see something new coming out. But we haven't started writing it, and I'm not really in the mood. After writing 2 books in 2 years and slamming out the last one, not really in the mood to start writing a book just yet. So kind of backing down on that for now.
All those other writing engagements we have to do on a regular basis. So yeah, a book added to that is quite becomes quite cumbersome.
Yeah, we need a break. So we're taking a break right now. So and I'm thinking about just taking a break from the market. I was telling Dr. K the other day, I'm just thinking of moving to Hawaii and starting a farm. You know, at least I'll know I'll have food there that I can live off of. Maybe that's where we're headed. But but then of course we had the follow through the next day. But anyways, somebody makes one final comment here on gold. The high frequency traders could be running gold. Makes this hard to play long for certain. Yeah, I don't think we're going to be playing. You want to. There's no trade in the precious metals right now, so I don't know if you can short them here. You could try, I guess. Not something that I'm really too familiar with. I've just been a buyer of gold on the basis of continuing QE and the potential for continued currency devaluation around the world. And in fact, gold price in yen is actually moving up. But so we'll see how this pans out. But right now, the gold you can see here is holding the 1500 level on the futures. Dr. K, we're about ready to wrap it up here. You got any final comments on the market? What's your take here? Do you think people should just kind of lay back and not get too involved here? Or do you think they should be aggressively trying to move in here?
Well, yeah, because the window's pretty foggy right now. I would, play very lightly so that if you're wrong, you're not going to lose very much. And hopefully something changes with this kind of environment. It always does. It's just a matter of being patient, and you got to watch for the signs. But it will change. But right now, I can see why investors are risk off.
Yeah. Yeah, and that's kind of where I'm at too. So I'm probably happier not really participating too heavily. So it's a little choppy, not really well defined, and you could just be in this sort of mushy environment for a period of time. Anyways, that's all we've got this week, you guys. Kind of, not really much anything, to tell you the truth. And things are looking dicey, as Dr. K said. So we're just kind of hanging out here and seeing how things progress, and we'll just check it out next week when we